Hey everyone, lead trainer with StocksToTrade, Tim Bohen. Today I'm going to talk about one of the things that is probably driving you nuts if you're a new trader. Hey everyone, be sure to like, subscribe, and share these videos with your friends. We're putting out a ton of great information that helps out new traders, intermediate traders, and in my opinion, even advanced traders. But that being said, you're probably coming to the YouTube because you're new, you've got a small account, and you're probably frustrated with the PDT. All right? So just real quick, I'll go over what the PDT is because maybe you don't even have a margin account yet. You know, keep in mind the PDT only applies to margin accounts. But what it is it actually follows one of my favorite quotes of all time by Ronald Reagan. And it is he considered the 9 most scary words in the English language to be, I'm from the government and I'm here to help. I'm a huge believer in that quote, big Ronald Reagan fan. But anyway, the PDT, in my opinion, is the perfect example of unintended consequences. So what it is if you have less than $25,000 in your account, you're considered an unsophisticated investor, okay? I think that's kind of I don't like that, but that's the government term. So basically what happens is they're trying to protect you from yourself. They only give you 3 round trip trades, so day trades, in and out the same stock the same day in a rolling 5-day period. So if you make a day trade in and out the same day on Monday, Tuesday, Wednesday, you're unable to trade at all until the following Monday. Then you only get that 1 trade back. So here's the worst case scenario. Say on Monday, you make 3 trades, 3-day trades. Maybe they're profitable, which is awesome. But now you're unable to trade for 5 rolling business days. So all the way until next Monday. Now, the other bad part about it is, and this is what trips up most traders, is you start making bad decisions because you don't want to use your day trades. So we'll talk about that another time, but just know that I think that this rule is silly. Today, what I want to talk about is helping you deal with it. Because at the end of the day, it's a government regulation. Your broker's going to enforce it. It is what it is, okay? Maybe you don't like that the speed limit's 55, but the speed limit's 55. You got to follow it or you get a ticket. So I'll save the rant for another time. Today, let's talk about how to actually deal with the pattern day trader rule, because if you follow these steps, I think it's the best way to get you over that $25,000 so that then you're free to day trade as much as you want. So number one thing I want to start out with is do not use leverage, okay? I know it's tempting. You got a margin account. Here's the thing. The PDT applies to margin accounts. Most traders are like, well, I've got a margin account. Why wouldn't I use it? Why wouldn't I use my 4x leverage, my 6x leverage? These days, you get the right broker, you can get 10x leverage. But what that does is, listen, and I'm not trying to put you down, but if you're a new trader, you're going to make mistakes. You're going to screw up over and over and over again. And remember what leverage is it's an accelerant for good and bad, okay? It's like putting race fuel in, okay? That's great. Your car will go faster, but if you don't know how to drive, things get ugly really fast. So what happens with a lot of new traders, they're making a lot of bad trades. It's just the way it is. And now those losses are magnified because they're using 4x, 6x leverage. So now instead of losing $50 on a bad trade, they're losing 200, 500, or even more. So I know it's tempting, but I tell you, especially starting out, leverage is going to burn you. It's going to burn you. I promise. It will be an unintended consequence, as they say. Next thing I want you to do if you're under the PDT, again, I know you got a small account. That's why you're under it, but don't go all in, okay? It's almost going all in on a trade is kind of the same thing as using leverage. I mean, I get that if you got a small account, you're going to want to buy a ton of shares because, if the stock moves 10%, 20%, 30%, the more shares you have, the better it is. But I'm telling you, if you're under the PDT, your number one goal is green trades and execution and making good choices, okay? I know. You want to double your account. You want to triple your account. You want to make $1 million today. But if you're new, it's not going to happen. I want you making good decisions, and I want you making green trades consistently. And you're not going to blow up your account overnight. It's not going to double, triple overnight. But the more you build better habits, recognize good setups, then start scaling up. Okay? Then add size. So many new traders, they have one good trade, they add size, they're done because they take that big loss, takes them out. So take a manageable risk because you're going to make mistakes. Don't go all in. It just enhances the potential losses. Next thing I want you to do is creating your own watch list and thinking for yourself. Okay? This is one of the biggest things that I see a lot of traders do is they just come in and they look at the top percent gainers. They look at some stock that's moving and they're like, oh, I'm going to trade that. You have to have a process. You have to have a methodology for building a watch list. I tell you, especially right now. Right now, we're recording this in summer of 2020, and you can't keep up with the number of plays out there these days. You have to have a process that you can work through to decide what is your stock. Now, you might be like, well, how do I build a watch list? You're telling me to do it. How do I do it? Check out the StocksToTrade team. The great thing is every morning I'm live doing exactly that. Every morning, every single trading day, we build a watch list live. We collaborate via chat. We discuss it. We break it down. Check out the StocksToTrade team. It's the best way to learn how to build that watch list. Next thing I don't want you doing is following alerts. Okay? I know it's tempting. Okay? You see, these traders out there, whether it be on Twitter or on chat rooms, they're saying buy this, short this, buy this, short this. The biggest thing is to get over the PDT, you need to be self-sufficient. And to stay over the PDT, you need to be self-sufficient. And if you're following alerts, you're never going to be a self-sufficient trader. Because think about it. If you're just doing what somebody else says, you don't know what their process is. You don't know what their methodology is. You don't know what made them decide to pick this stock. And, you're dependent on them. One of the best ways to fail in trading is not being self-sufficient, is being dependent on others to give you a watch list, to give you a stock to buy or a stock to short. Because what happens if that person quits giving alerts? Or what happens if they go cold on their alerts and none of them work? What are you going to do then? So it's one of the biggest things I want you to learn is avoid alerts. And if you do follow an alert service, that's great. But reverse engineer the trade. Don't just follow it and put your money on the line. Try and figure out what they were thinking. And then if the trade works, be like, okay, now I see why. Or if it doesn't work, reverse engineer it. That's the best way to use alerts. Next thing I want you to do is set goals and stick to them. And when I talk about goals, it's not profit goals, okay? If you were like, I want to make $1,000 a day or $10,000 a day, you got to be really careful of that because I think that quite frequently brings over trading and aggressiveness. Because maybe you're up $500 on the day, which, hey, that's a nice day. Compound $500 a day times 200 and some trading days a year, not bad. But I think if you set profit goals, it screws you up mentally. The goals I want you setting are process goals, okay? I want you getting up every morning at 4:30 like I've been doing since I started learning trading. I want you building a watch list every day. I want you filling out the worksheets every day. Okay, every day in the StocksToTrade team, I've got pre-programmed worksheets that we work through to find the best trades. Show up every day. Watch the biggest movers. Track your data. Create good habits. Those are the goals I want you to follow. Did I create my watch list today? Check. Did I get good rest the night before so that I'm ready to go? Check. Did I eat breakfast? Did I exercise? Did I read the news? Did I see what the S&P 500 is doing? Did I see what Bitcoin's doing? Did I check out these news sources? Did I go to the Wall Street Journal, see what's going on in the world? Those are the goals. Those are the habits I want you forming. And at the end of the day, listen, one of my favorite quotes by Jocko Willink is discipline equals freedom. If you have that discipline to have good goals, good habits, then you can achieve the freedom of trading. Next thing is focus on a specific time of day. I think, again, a thing that trips up, especially smaller traders, is, you probably have a job, okay? I hope you have a job, and work with your schedule. And just, if you work afternoons, if you go to work at noon, and you work the afternoon shift, focus on mornings. If you got a day job, I think the best thing to do is focus on afternoons. Now, you might still be at work, but one of the great things about most of my afternoon patterns, they're actually very work friendly because I was trading these patterns when I was at work at my business. Now, full disclosure, I own the business, but I still had a lot of stuff to do, and I always focused on afternoon patterns. So, and hey, if you're doing office work, white collar work, we all know most of the work's done in the morning, and people just goof off the afternoon and wait for happy hour. We know what's going on. We've all watched The Office, So anyway, focus on afternoon patterns, but stick to because there's different patterns based on the time of day. So that's the biggest thing I want you to do. I don't want you trading morning patterns and afternoon patterns sitting there all day. Pick a specific time of day and stick to that and hone your skills within that window. Last thing I want you to do, and this might be the most important, and that's why we saved it for last, is track your trades. Keep a journal. See what works, what doesn't work. So when I talk about tracking your trades and keeping a journal, look at this mess, all right? This is probably the first 2 or 3 years of my trading. And what you'll see is in these, I go over every entry, every exit. There's a lot of madness and rambling in here too, but I tracked every trade. I know it's old school, but I did it. I kept track of every single trade, every single setup. I used to cut and paste and print charts and put them in these, I love these moleskin notebooks, but I'd put the chart in there, I'd write my thoughts, I would break down whether or not the trade worked, okay? That's one of the biggest things I think newer traders struggle with is they're trying all kinds of different stuff, and that's what I want you doing, okay? I want you trying high price, low price, different patterns, going long, shorting, experiment. But remember, what's the biggest, how does a scientist figure out a scientific theorem, okay? He tracks his results, okay? He doesn't mix a bunch of stuff together and then, something happens and then not track that because you can't replicate it. If you don't track it, you can't replicate it. And when something blows up in your face, you got to be able to go back and say, what was my thesis? Why did I enter this trade? What was I thinking? And what can I learn from it next time, okay? So not saying you have to have 75 moleskins full of journals, but Evernote's a great tool. I use Evernote every day in the Steady Trade team. Use what works for you. I actually migrated from these to 3-ring binders, but focus on what works for you. Track. That might be the most important thing to do to ever get over the PDT. You got to know what works and what doesn't work. All right, everyone. Thanks again. And as I said, the best way to learn how to track your trades, to learn how to build a watch list, to learn how to do all these 7 things I just told you to do is to get in the Steady Trade team. 2,200 archived webinars as of today. Literally, I'm recording this at 1:53 p.m. I'm starting another webinar in 7 minutes. We're going to be talking about VWAP holds, all these afternoon patterns that I want you to focus on. Get in the Steady Trade team and fast track your path to success.